crypto bros make money literally by making money, and they've made over $1 trillion out of thin air. They'll accuse the U.S. government of making money out of thin air. Maybe we do, but we're the U.S. government. Crypto bros make money literally.
All right, hello and welcome to Camel Finance. I'm your boy Camel, and the comedy just keeps going. Hashtag delete Coinbase was trending, so I had a look at this, and apparently it's all centered around Coinbase sending an email claiming that the Pepe is a hate symbol. And to be honest, I have to kind of agree, right? If you hate sound money, then what better way to represent that than by buying Pepe token? It's a joke, it's a joke. Don't hate me, don't hate me. Okay, I have the updated channel OG list, so I think this is pretty much done now. Speak now or forever hold your peace. I believe this has embodied everyone that is indeed a true channel OG, and I believe this list of triple OGs is finalized now as well. So again, speak now or forever hold your peace. We will come back to this every, I don't know, some sort of milestone for the channel. I think we'll come back and pay homage as and when. But thank you again to everyone that supports the channel. Hello and welcome to the new subscribers. And hopefully we can continue to profit from these markets live on YouTube. Yesterday was, of course, US CPI day. Okay, so we, as I'm sure you're aware, came in at 4.9%, below the consensus of 5%. Not really very close. I was hoping to see it lower than this. It was not very close to the truflation print, which was on a 3-handle. I think it was around 3.8%. But this does set us up for an even bigger drop next month. So far, so good. I did say yesterday that we should probably be careful of traps, and we should be looking to form a new daily cycle for Bitcoin, and then you'll see me add Bitcoin, ETH. I added Coinbase, posted to Twitter yesterday, looking to add Riot, Marathon, and MicroStrategy. But for me, regardless of price action this week, this is my big focus. I've been talking about this on and off for a while. This is the inflation to deflation pendulum, and of course it swings. So we've seen the peak inflation at 9.1. We've since been coming down, and we've just hit 4.9 in April, our lowest reading ever. Remember, we talked about this over and over again on this channel, that we will hit this Goldilocks zone. Another analogy that I really like to describe this process is when you go from boiling hot to freezing cold, there's a period in the middle, somewhere around here, where everything feels comfortable, right? And that is what this Goldilocks zone represents. As inflation comes off, you get to this point where we are now, and we can start to say, well, we haven't quite had a hard landing yet. Things don't look so bad, right? Inflation is coming down. Maybe we can engineer a soft landing. Maybe we can swerve a recession altogether. Maybe, as it stands, the stock market is just going to continue to make higher highs and higher lows. Maybe Bitcoin's going to continue to rally. And then, like I said, we're in this Goldilocks zone. Things don't seem that bad right now. And whilst things don't seem that bad, it does give the market opportunity to rally. And I believe that's what we're going to see. Like I said, when you come from boiling hot water to freezing cold, there's a period somewhere in the middle where it's quite comfortable. And that's usually where we see the market rally. Do make no mistake about it, though. We will be continuing this pendulum swing in this direction towards deflation. And at some point in the not too distant future, we will see the crash that everyone has been championing all the way since the lows of last year. So as per yesterday's video, I was talking about hopefully seeing CPI come down. We can check that off, even though it was only a marginal drop. And I was talking about hopefully not seeing this repriced to the right-hand side. So currently the expectations are, as you can see, 91.5% chance that we have seen the last rate hike, and they will pause rate hikes in the June's meeting. So of course this can change, and it can change a million times in the meantime. But as it stands right now, we have CPI coming off. We can tick that one off, and this has not repriced to the other side. If this moves to 50-50, then we might have cause for concern in terms of seeing the melt up complete, or at least the market continuing to rally. But all the while, we are moving towards a pause in rate hikes. The market should, in theory, front run this pause. Remember as well, the pivot from hiking rates to a pause is historically very bullish, and the pivot from a pause to cutting rates is historically very bearish. So all the while we're in this neighborhood here, it's reasonable to expect the market to rally in line with inflation coming down whilst we sit in this Goldilocks zone. Once they start to cut rates, and that could come as early as next month, so we have to be prepared for all outcomes. But once they start cutting rates, historically speaking, that is the exit signal and the time to leave the market, particularly in this instance if it is coupled with them banning Congress from owning stocks. So as ever, we continue to take things one day at a time, but Camel is not yet bearish. Put this out yesterday. I said it seems we're getting the standard reaction to CPI. So are we going to get a turnaround Thursday? The market has actually turned around into the close. You probably noticed that yesterday. There is a typical structure that occurs in CPI, which makes trading quite difficult. We have a pop-up that is immediately reversed. We typically finish down, and then the following day, we tend to find a direction. All of this seemed to happen in one day yesterday. So we had the initial spike on the CPI print, then we crashed, and then by the close, we ended up somewhere back here. So this, of course, is a manipulation, but you just have to get over it. There's no point being angry at manipulation. There's no point trying to blame others for your mistakes. Yes, it would probably be easier if there wasn't manipulated markets, but manipulation exists in every market, and we just have to take it on the chin. $760 million of Bitcoin futures were wiped out yesterday in a 20-minute span. So this sucks if you were one of these people leveraged long at the wrong time. But the good news is, with the leverage out, there's room for the market to be spot driven, which is what we want to see, because that is a much more trustworthy move. And that's exactly what we saw. You can see at the bottom here, Bitcoin aggregated spot volume spiked up over 1,000% as we got to the $27,000 neighborhood. So we wipe out the open interest on the futures, we wipe the leverage out of the system, and all of that leverage money is transferred to spot Bitcoin, which is held by the smart money, the institutions, the whales. This is what I would like to see, because this makes any price movement from here far more organic, far more real, and far more trustworthy. John Doss here says, look, he started working in Wall Street in '83, and yet this is the most manipulated market in his career. That's really saying something. It really is saying something. We have fake data. We have unlimited QE. This is just an unprecedented time to be a trader. And this is why I advocate for the daily chart. If you're a 1-minute wizard, then that's absolutely fine. You do you. But having the daily closes gives us the opportunity to slow things down, to manage the risk, and more importantly, to capture the much bigger moves over a longer time frame. I want to talk about ordinals. I want to play you this 1-minute clip or 50-second clip from Michael Saylor.
So I think that what happened with ordinals and NFTs is we crossed this chasm from what was a bearish scenario to a bullish scenario. If I was a miner, I would be ecstatic. I think that long term, there are a lot of implications. Long term, the implication is there's going to be a lot of applications on the Bitcoin base layer. Yeah, if I can inscribe a piece of art, right, an NFT is kind of an art, but I could also inscribe my last will and testament. And if my last will and testament is moving $1 billion from me to you, how much is it worth to you to have that burned onto the blockchain and cryptographically verified?
Yeah, at least $1 billion for me, Michael.
Would you pay 20 bucks?
Yeah, 100%.
Yeah. Would you pay $100?
Of course.
There you go. So there are interesting applications.
So maybe it's not all going to be meme coins and NFTs. Maybe we're going to see real world use cases come out of this. However, I'm still in the camp of people that believes this is going to be a short-lived fad. We can see the Bitcoin devs are trying to cancel ordinals here. Whether or not this will go ahead, right now the probability seems quite low that this is going to go ahead in the very near term, but I do expect some kind of patch to be issued. I don't think this is going to continue, unless of course this is just going to force more and more Lightning channels to open and for the Lightning network to scale massively. And keep in mind, every action has a reaction or consequence. Bitcoin fees are up, resulting in the biggest change in Lightning node adoption, having added over 2,500 Lightning nodes in the past 7 days. And you can see that on the right here, this green spike. This is the change in Lightning node count. This is the biggest change ever in the history. So every cloud has its silver lining. Maybe this will turn out to be what Bitcoin needed in order to get it to scale. And it will certainly be interesting to keep an eye on this and how it develops over the coming weeks and months. In other news, the Bitcoin Miner Marathon has just partnered with Zero2, which is backed by Abu Dhabi's $853 billion sovereign wealth fund to create the Middle East's first large-scale immersion Bitcoin mining operation. So Abu Dhabi's sovereign wealth fund getting into Bitcoin. If you don't know what immersion Bitcoin mining is, all they do is submerge the Bitcoin miners in a cooling fluid, which is non-conductive, obviously, so it doesn't short the ASICs out. And then they circulate the coolant through a cooling pump, and it takes away the heat and keeps everything running nice and efficiently. Here you go. I found you an example. So as you can see, all submerged in a coolant fluid, which has to be non-conductive, of course. And then you just cool that down like the radiator in your car or something similar like that. So from Abu Dhabi to New York has introduced a bill to accept stable coins as a form of payment for bail. So it's a pretty wild time to be alive right now. They are obviously having to embrace cryptocurrency And this, of course, fits in with that theme. Liechtenstein's government is now going to accept Bitcoin for payments. And we continue to see governments embracing and adopting this technology. Meanwhile, here in the UK, the tax authorities have just been granted the power to seize Bitcoin held on exchanges. Needless to say, take your Bitcoin off exchanges, bear the ultimate bearer asset, own your crypto on a cold wallet. Otherwise, somebody could, in theory, take it from you. So just before we get into the charts, I want to show you a couple of nice things. This is the Dixie, the dollar index, on a monthly. You can see just about maybe behind there is the moving average. We have closed 2 monthly candles below this moving average. The last 2 times this happened, Bitcoin went up 2,900% and 1,300%, with the Nasdaq going up 51 and 151%. If you bought the absolute top and held all the way to today, you'd be down 20%. But if you're a bear that sold the bottom and has remained out of the market or short, you are 27% out of pocket. So being bullish continues to be the right posturing through this year and since the lows, which were all the way back in October of last year. The dollar still refusing to break down. To be honest, when you get this level of consolidation, it typically looks to me like we are going to see a counter trend bounce before then resolving lower. But I do think any counter trend bounce would be contained at this downward sloping yellow resistance line, which at the moment would be a maximum of about 103.6. Yields still under pressure, aren't they? That's likely because they know the Fed is done hiking rates. Same story with the 2-year yield, still speaks to downside more than upside. But things start to get a little more interesting when we hop over to the stock market, particularly with the VIX. I'm going to start with the VIX today. So I need to get rid of these squiggles so we can see what's going on a little bit. You can see here, okay, this is currently on a 16 handle. The VIX is currently on a 16 handle. It's had multiple attempts to try to find a opportunity to spike, and it hasn't been able to do so. Also, you can see failed recovery of this green support line, failed recovery, back test, now continuing lower. So this does not speak to a volatility event. This does not speak to a stock market crash. This continues to speak to the likelihood, in my opinion, that we will continue to see this bleed down here, end up drawing a trend line, and then I think, like I keep saying over and over again, the trade of the year will be to long the VIX from the low teens. So one day at a time, but for now, this does not speak to a stock market meltdown, in my opinion, and that's really nice to see, since we're currently long equities across the board. The S&P still hasn't yet confirmed that this is indeed a new daily cycle. So any kind of rollover from here would mean that we have not got, I got it wrong on this cycle low, but I don't think that's what's going to happen. I think what's going to happen is we're going to see this breakout, we're going to see this clear this local high here, and then we can go ahead and say with confidence that we have indeed got a new daily cycle ahead of us, and therefore it's reasonable to expect roughly a month of upside before we drop down into that next cycle low, which is due around the end of June. The Nasdaq keeps rallying, as you can see. So we're long, we're strong, we continue to push, and the Dow Jones, as it stands, has not yet taken out its low. So this to me speaks to moving higher as well. I'm just noticing, if you're not in here, somewhat of a opportunity to get long on a breakout of this downward sloping red resistance line and put your stop below one of these lows here. It's been a while since I covered the FTSE 100, but there's a couple of opportunities coming up, I think, in terms of the FTSE. There's one, which is a lower probability but higher risk reward entry on a downward sloping red resistance line break. So that could potentially be a long out of there, and it would look something like this, right? With a stop just below this local low here. Or failing that, if you wanted to play it safer, but end up with a slightly wider stop and thus a lower position size, you could wait to see a breakout of this yellow downward sloping resistance line, and then the long could look something like this. So I'm not sure if I'm going to take these trades yet. I'm going to see how the price goes, but I'm currently considering certainly taking this breakout of the yellow one, because that's a much higher probability. The steeper the angle, the lower probability of success. But when it's a wide angle like this, when it's a shallow angle like this yellow one, these are usually high probability setups. So if we can do something like this green squiggle, expect me to tell you I'm going to go long, expect me to put the long on, and it will look something like this. Apple still blasting upwards, isn't it? So nothing more to say about that apart from long and strong continue to push. Here's Nike. I'm thinking about closing this Nike long today, and I'll tell you why. There's a bunch of reasons. First of all, it closed a daily candle below this upward sloping blue support line. So that is an early warning sign. Now, if it can just recover today and close up here and blast off pretty soon, then I may well continue to push this long. But if we close another candle outside of this upward sloping blue support line, and particularly if we come down and undercut this low that we set yesterday, if we come down and undercut that, then I don't really want to be anywhere near longs. Now, you could always make the argument that we've got breakout, this would just be retest of the red downward sloping resistance line before a move higher. Maybe that's the case, But experience has told me when you break out like this and then consolidate for a while, it's usually not a good sign. If this thing was really going to break out and fly, it would have looked something more like that. And it just hasn't. I've just been sat here waiting. So there's always the chance that if we close another candle down here, I may well exit the market only for it to then strongly reverse. But it is what it is. At the end of the day, you can't keep hanging on forever. If Nike doesn't recover today, if Nike doesn't recover this trend line and start to blast off, then I'm thinking about exiting this trade. Here's IPX. IPX, still long and strong, still continuing to push, and we'll see what the market can give. I think ideally, if we're going to get a melt up situation, then we could well see this significantly higher up, but I would be targeting this local high from back here as take profit 1. Bitcoin, on the other hand, still working on a cycle low. I think this is day 62 today. Yeah, it is. So day 62, we can run all the way to day 66 and still be inside the standard tolerance. Question is, how low will it go? It has obviously undercut this recent local low. So we should be looking for a swing and a reversal any day now. We should be no more than 3 or 4 days away from seeing a swing and a reversal. In theory, that swing and reversal should be buyable. We should be able to add here. We should also be able to add to Ethereum, and we should also be able to add to these crypto miners and crypto related equities. So I added Coinbase yesterday. I posted this to Twitter. We've got a breakout, so maybe we're going to get a retest and go, or maybe this will fail. Either way, that's what stops are for. You can see MicroStrategy. I was saying that if we can break out above here, that could be a long from me. We haven't done that yet. Maybe we'll do that today. If we do, then I think we can add on a breakout and move the stops up. Riot got a massive pump as of yesterday, but I said I didn't really want to chase it up here. I'd rather wait and see if we can get a retest and go. So if we can get that, I'll add. If not, I'm just going to continue to push my original entry from down here. I can see they had some earnings yesterday. Big 128% surprise. So maybe that's conducive to higher prices over the coming days and weeks. But I would think ultimately it's just going to track Bitcoin. And Marathon hasn't quite cleared 1070. I wanted to see a daily close above 1070 to start thinking about adding here and moving stops up. But for now, it continues to be a breakout retest working on that resumption higher. Oh, and I almost forgot XRP. Somebody asked me, is there a double bottom in XRP? Not on the daily time frame, not as far as I can see. So maybe if I move my squiggle, is this what you mean by double bottom? 1 there, 2 wicks. I don't count that as a double bottom. For me to see a double bottom, I'd want to see something much, much bigger for XRP. So I'd want to see it come down, do something like this and go. So to answer your question, is XRP in a double bottom? Not as far as I can tell, at least not on the daily time frame. I still champion this idea. I still think that eventually XRP is going to waddle around in here and break down. It's going to lose this red horizontal. Then I think it's going to be working its way down to lower numbers. So that could be anywhere between 40 cents all the way down to 28 cents or even lower. That's what I think is going to happen. I think it's going to bleed down. Then I think it's going to break out. And when it breaks out, you will see me go long. But I do think, personally, it's going to be a little while. I think it's going to take some time to work this out, a month, 2 months, maybe even 3 months. And then I think that trade will be one of the biggest trades of the year. So hope that answers your question for XRP. So as ever, one day at a time, things continue to improve slowly. Things continue to look good for seeing higher numbers through May. This whole rhetoric of selling May and go away, so far, not playing out. Of course, it didn't play out 9 out of the 10 prior Mays that we went through over the last decade either. So all we can do is continue to take things one day at a time, continue to look for that swing in Bitcoin. We really should see that any day now. And when we do, then I think it's time to start adding to positions and going long. Also looking to see the S&P 500 confirm that cycle low as I've been showing you earlier on. And other than that, things continue to look constructive. Profit continues to increase. And based on the interaction I had with many of you over the last few days, I know many of you are doing really well this year as well. So pat yourself on the back if you're in that club. As always, thank you for the support. And until next time, take care from me. All the best. Cheers. Bye.
What are you doing?